Hi again, this is Rick with AmazingAccuracy.com. Today is May 12th, 2016. It's currently 9:08 p.m. Chicago time. And we're currently looking at the daily chart of the live cattle futures market. And what I want to bring your attention to here, this is a Hearst type cycle envelope chart, and it helps us anticipate which direction the prices are likely to go in the short term. And as you can see here, for May 12th, this cycle envelope is anticipating that we are now due for a move to the downside. So that is what's being anticipated by this cycle envelope chart. Now, moving over to the daily chart of live cattle on my provisions charting software here, I want to draw your attention. We have three F dates here. We can see that we performed or we confirmed a higher swing bottom here, which launched the prices up. That was on time. Then when it hit the next one is when it went sideways to lower, and then today it went higher, and then that is marked by this F date where we are then expecting a daily swing. And if we go by what is anticipated by the cycle envelopes chart we just looked at, we'd be anticipating a swing top with prices moving lower. Is there anything else that might support that expectation? Well, let me show you. One of the tools here is the time price square tool. I'll apply that, and you can see price reacted here and here, then back here found support, rose up here, and look what happened here. It found resistance right here at the 90-degree from here to here. It says 45, but there's two squares that equals 90. That's a 90-degree move. And that's a time price move of 90 degrees up. It found resistance. Now I'll take that off. Another thing that you can apply here is simple Fibonacci retracement. Going back to the March 17, 2016 top you see here, putting it down to the bottom here of April 22nd, 2016. And you can see that today was a full 62% retracement, Fibonacci retracement from that March to April bottom. The March top to April bottom, we retraced 62% and hit resistance right on the nose here. So that is also another indication that we would likely see prices start moving down off this resistance. And then I also applied Fibonacci dynamic fan ratios coming off this bottom to that top to this bottom, projecting out to today, and you can see that it hit the 50% dynamic resistance. So several different methods here for calculating resistance, and it hit all three of them quite spectacularly. So this really draws my interest. Then looking at the weekly chart, for example, we can see that prices have been rising on the weekly chart, and here was we were anticipating a weekly swing. We're one bar off of that, which is still within the plus or minus one bar, and we have not had any other swing occur within this weekly turn period marked by this red diamond. So the probability is very high we could be looking at a weekly swing top here. Fibonacci applied to the weekly, going from this bottom to this top, 62% out, comes to this bar again. So we have several different indications from different time frames. They all point to the significance of this week. My only caveat or concern is that we gapped. And a lot of times we see these gaps occur. That is often indicative that the market is likely to continue moving in that same direction. And if so, often the distance between here and the gap would be from here to where it would be moving to. So that would be my only concern. But right now, if the cycle envelopes charts are correct in its anticipation for lower daily, and these resistance, they all hold, then prices move lower, we would be looking for that weekly swing top. So that's what we're anticipating. And well, that's about it. Thanks again for watching. If you haven't done so already, please subscribe. I'll see you in the next video.